Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the most bullish scenario where we have a finished regular flat structure in a 3-wave A, 3-wave B and a 5-wave C to the downside, where the most common target area for your wave C is the 1-to-1 trend-based fib extension taken from the high to the low of A to the high of wave B. This therefore is then also your invalidation, as now you want to look for impulsive structures to the upside to continue the bigger trend, which means that locally this is what we're looking for, a wave 1, a wave 2, and we want to look for a bigger wave 3 to the upside. The common target area for your wave 2 is the golden pocket to the 786, taken from the low to the high of wave 1, giving you a target area between 62.5k and 61.2k, which is hit as you can see. We don't want to hit the 886, that is a very rare target for a wave 2, increasing probabilities to take the low here sooner or later and hit that invalidation. The 886 is sitting at 60.4k. Now the bearish but eventually bullish scenario on the 4-hour time frame is this sideways double combo scenario, a W, X and eventually a wave Y, after which we look for continuation to the upside. In this scenario, the regular flat that we just spoke about is only a subdegree of a bigger wave W, and then we're looking for a wave X and a wave Y. Now this wave X could potentially already be finished over here. We could be working on a wave Y to the downside. However, this would be very short in time for a wave X. The vertical line on the chart is a fib time taken from the start to the end of this wave W to compare wave W with wave X, and by far most commonly waves have a relationship of at least 0.382, if not longer, but shorter is rare, and the wave X, yeah, it can be very short, can be very long, but preferably also ends after the 0.382. Now, as the probabilities increase, this move to the upside is a 3-wave structure, a scenario that could lead to wave X finishing after the 0.382 fib time, which is sitting on the 2nd of May, is this flat structure here, 3-wave A, 3-wave B, and then eventually a 5-wave C to the upside to take the high of A. Your common target area in B is the 1.236 to the 1.38, taken from the low to the high of this wave A, giving you a target area between 57.7k and 56.6k. Inside this wave B, we preferably look for zigzag structures, as that is most common. So on the 1-hour time frame, we then preferably look at this scenario here, where we have a wave 1, 2, 3, 4. We're looking for a wave 5 to end somewhere in the common target area for a wave 5 between the 1.236 and the 1.618, 63.1k to 61.1k. A move towards the upside in a wave B, where we do have some interesting resistance above us here, the blue box 65.4k to 65.8k, and then we want to continue our way to the downside in a bigger wave C, which of course then should be an impulsive structure. The invalidation for this scenario is price moving towards the upside and taking the high. The most bearish scenario, however, is a move towards the downside and the end of the trend. We then have a wave 1, wave 2, another wave 1, another wave 2, and we are looking for a very big wave 3 to the downside to much lower prices. In this scenario, this wave 2 here hit the 0.382 fib time, taken from the high to the low of this wave 1, which is fine for a wave 2. So this works. Actually, one candle before the line is the actual high of wave 2, not gonna lie. So it's actually just finished before the 382, but it's so close, it's pretty respectable. The main problem for this scenario, however, is the 886 touch that we have over here. The 886 is taken from the high to the low of this wave 1, and an 886 is a very rare target for a wave 2, common target for a wave B or a wave X, which increases the probabilities that anything that comes after this high here is corrective in a wave C or a wave Y, which therefore increases the probabilities to eventually move towards the upside, which therefore means it increases the probabilities for either the bullish scenario or the bearish continuation of the range, but eventually bullish scenario to then move towards the upside. On the lower time frames, if we look for a 1, 2, 1, 2, and 2 is already finished, and we look for a very big wave 3 to the downside, we want to count impulsive structures to the downside on the lower time frame here. So on the 1 hour time frame, what we're then looking for is a wave 1, 2, 3, 4, 5, preferably finished here. That would be most bearish, so that your wave 2 is also finished and you can already start working on a very big wave 3. Alternatively, by the way, this wave 2 will move to the right side and this wave 1 moves to the right as well, so that this bounce to the upside is then eventually a 2 and you get a 3. So that would then mimic, FYI, this scenario here. Instead of an A, B, and then a wave C, we're then looking for a 1, 2, and a wave 3, right? But the reason that I put this scenario like this is to show you, do we still get a bounce to the upside, right? What are the probabilities to still get a bit of a bounce or continuation to the downside? Now here we have a wave 1, 2, 3, 4, 5, right? Finishing 1, finishing 2, looking for a move to the downside. 1, 2, 1, 2, maybe another 1, 2, but you expect price to fall and eventually take the low. Now what is significant here is time once again. You can see the 0.236 on my chart taken from the start to the end of this wave 1, comparing wave 1 with wave 2. And you can see this wave 2 is incredibly short in time, finishing even before the 0.236, which is incredibly rare for a wave 2. Second, if this is your wave 2 here, we have to count a 3-wave structure to the upside. And that is not really easy. It looks very much like an impulse structure on the lower time frames compared to a zigzag, for example. Therefore, the probabilities to eventually look for a little bit of a bounce are higher compared to a strong continuation to the downside, a straight line down to eventually take the high. But we do want to see some local support. Looking at the CVD divergences, it's actually good to wait for a range to form after a drop towards the downside into support here. So as the range will form, we will get a better idea of what is actually happening. If we do go to the CVD chart, this is the 5-minute time frame, we do have a higher low in price and a lower low on the CVD on blue. So that's a bullish CVD where the target is this high. Also on yellow here locally, we had a higher low in price, lower low on the CVD, but that one already played out. And now at the moment here, lower high on price, higher high on the CVD, so a little bit of bearish CVD. So you can see it is a bit of a mix on the lower time frames, and that is why I like to give price a little bit of time here. Now, if you then look at the probabilities of the different scenarios, then on the 4-hour time frame, the eventually bullish scenarios have a higher probability, where either you're looking for a wave C and a continuation to the upside, or a wave W, X, and eventually a Y, and then afterwards continue towards the upside. On the 1-hour time frame, which is what we're looking at right now, the probabilities are also higher for a bit of a bounce towards the upside at least. And then we have to see if this is a wave B or a wave 2, or then we're looking for continuation to the upside. So what I'm looking for here locally is a bit of proof of support and a bounce to the upside in a wave B, 2, or continuation. We are now at support. We mentioned that the golden pocket from the low to the high was not hit with this low, and that it would be very nice to actually hit it. So now we finally hit it over here. However, there is the potential here for another low to be made, because this structure to the downside so far is not a great wave 5, right? If this is the end of a wave 4 and then your wave 1, 2, 3, 4 is a flat and a wave 5. Wave 5 can be pretty much two scenarios, an impulse to the downside or a diagonal. Now, because of the overlap, 1, 2, 3, 4, 5, overlap between 1 and 4, that is not allowed. So then we have to think about diagonals, but these moves to the downside are pretty sharp, and you would need to go to the 3-minute time frame or 1-minute time frame to see if you can count a zigzag in here instead of an impulse, because in an ending diagonal, all of the waves have to be zigzag structures. So that is not ideal, and besides, if we do count a diagonal here, wave 3 is longer than wave 1, wave 5 is longer than wave 3, so it is an expanding diagonal, and expanding diagonals generally are rare. So it's not a great structure for wave 5, and the only way to end is a potential diagonal, where then all of the waves are zigzags if you want this to be the low over here, but it looks quite impulsive, making it quite awkward, right? And it looks a bit better than with potentially a multi 1-2 even for further downside. So expanding diagonal, not too great. So yeah, there's the potential here to take this low. Patiently waiting here for some proof of support. Let the chart show you it actually wants to move towards the upside for a bounce. It does have higher probabilities from an Elliott Wave point of view as a wave 1, 2 and looking for a bigger 3, or an A, B and looking for a bigger C. Doesn't have the highest probability because of how short this move is in time, but at least we want to see some proof of support. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.